The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome to the show, and it's Tuesday night here in the Philippines. We're looking at crude oil. It's a little mixed up there. Looking at crude oil, we're looking at the May contract, and I appreciate you guys bearing with me yesterday. We had a couple of little issues with HotCom and ended up interviewing, kind of spur of the moment, one of my programmers that is really a pretty bright light when it comes to doing what he does. And I reminded him before we interviewed him that it was recorded, and I reviewed everything afterwards, and he gets paid in a week or two, and act like he likes me at least. So there's a little bit of that in play there. So I think we talked a little bit about where he came from, and some of the travels in the programming world that he's been through. But we really like to get people like that on board. They bring a lot to the table, and it's always interesting to meet people from afar, and ended up really striking up a really good relationship with this guy. Got a great team. Got a couple of programmers that are from different places on the globe, and it's just amazing how you can work together these days in a collaborative environment with some of the tools that they have available. We started using something called Kinja, which we actually did a run through today, and we're going to actually be doing some programming for that group. But what an amazing tool. It's kind of a combination of Basecamp, Skype, and Dropbox all in one. Hold on 2 seconds. There. Okay. All right. So as we look at crude oil, the reason I've got this up is because, we've come up into an inflection point on the May contract here, 48.03 unfair highs, and we've kind of drifted back down to 47.57. Now you're starting to see the articles, oil's going back to 70 instead of going to 30, and the Chinese situation has slowed down a little bit. But as I looked at crude oil, and it's those news articles, you can take them for what they're worth. But as we come into these daily inflection points that have backed off, I was looking at some of the XLE components, looking at the XLE in general. A lot of these stocks have now, just on this little bounce here, have kind of run up into some resistance on an individual basis. So you got, and I'm going to pull up this is the daily on May crude. I'm going to pull up the XLE really quick here, and we're going to take a look at that. And as you notice, the XLE kind of broke above, has been consolidating a little bit, and drifting a little bit higher. The technical damage on the XLE, as it stands right now, we talked about getting a new profile down here to start looking at this a little differently. On a relative strength basis, it held in there relative to crude making lower lows. XLE did make lower lows, and then we kind of got back above the profile, consolidated above. And as we look at this particular type trade on the XLE now, 76.19 is going to be where you can take a look at stops below on this. But as we look at crude oil coming into that resistance up top, I want to actually look at a couple of stocks here on the scanner really quick, because this was kind of astonishing actually to look at some of these stocks, how they had just literally been very sympathetic. And I'm going to bring the scanner in here really quick, with crude oil hitting resistance at the same time. So as I pull this up, these are the XLE stocks, and I was kind of looking for things that had kind of drifted into the unfair highs on the top of the box here. We've got CNX, Chevron, EQT Corp. We've got some other inflection points we're hitting here on Apache, APA. One that's just really ugly. I'm going to go down to Hess Corp, HES. This is one to not look at as on sale, by the way. So I see all the red. I see the bottom of the box here on the weekly. What does that mean? That means that price action, I'm going to pull up our landscape chart. That means that price action really is just, look at that. It's just sitting literally not wanting to even get its toe in the water up north here. And we're going to take a look at this on the charts here really quick. And I'm going to try to summarize what I'm trying to get across here. Here's the situation on Hess. So as we look at this, not one that's wanted to the past couple of weeks get off weekly unfair lows, and at the same time we are not really wanting to even have any technical damage on the north side on the daily. So this is one that could actually drift lower as crude oil now has reached some resistance up top and may fall off. Now there's a couple other things on the radar screen similar to that. I'm going to look at Diamond Offshore. I don't know if this was the one. I think it was the one I was looking at. Yeah. So this is kind of a situation where, similar to crude oil, coming into unfair highs on the daily, not wanting to kind of stabilize and get above. Really, that action right there doesn't want to be there. Hit the target, boom, didn't want to be there. So I think crude oil could, rattle around here. Obviously, this has been somewhat dollar dependent, and we're going to go back into the scanner really quick. Take a look at a couple other candidates here, and we're going to take a look at EQT really quick. Let's just take a look at EQT. And the reason I'm pulling these up too is because as you look at these, this one's saying it's right around daily unfair highs, looking a little bit stronger than the rest here. But remember, crude oil may pull back a little bit here, and I don't know if it's time to buy oil stocks. All right. That's kind of the bottom line of what I'm trying to say. Even though this looks very ripe, as if, hey, we closed above, we're rattling around, we haven't broken down back into the fair auction, I think you need to be actually looking at some short candidates that might have showed their hands already on crude oil. Somebody's actually asking me to look at XOP really quick. I'm going to pull that up. This is the Spider Oil and Gas Exploration. And as you can see, crude oil, kind of didn't want to get above that similar analysis type crude oil inflection point, 48.97. So what do you do with this now? I think you just got to sit tight. And by the way, we kind of poked our head down below the weekly unfair highs, which is not a good sign. I think you just sit tight with these. You don't want to, going into the XOP, I don't think you want to just, look at this as a great buying opportunity right now. Crude oil is going to have to close above that. And I'll just pull this back up. Crude oil is going to have to close on the May contract above 48.03. And right now, pre-market, we're trading 47.58. So let's just let that happen before we start looking at anything else on buying strength on crude oil, on oil-related stocks, if that makes sense. Okay. Got a lot of other candidates we can go through on the crude oil scene, and I'd actually like to just bring up a couple more here. Noble Energy, NBL, we're going to take a look at that, and we're also going to take a look at PXD, Pioneer. So let's look at NBL and then PXD. NBL, there we go. This one really hanging in there. This is a really good example of why to use stocks. Stops. This kind of started showing itself a little bit, had relative strength, not lower lows with crude oil, got its head above water here, boom. I was actually looking at this for some longs myself because the scanner kind of said, okay, yeah, this is kind of above the box. It's a little bit of strength here. Crude oil may have some more legs to it, and boom, just caved in. So stops below 47.58. It's a little bit stingy situation there, and I think you just sit tight with this right now and just kind of wait and see what crude oil does on a closing basis here. PXD really quick. Similar situation. Just wanted to pull that up. Kind of mirrors that, but this one really has, in a sense, been on a relative strength basis a lot stronger than the rest of them. So we got the close above. That was, this would have been great if it had kept going, but crude oil ran into some resistance again. I think we just got to sit tight with these. It's pretty expensive stock. Let's take a look at, let's just kind of drift away from in the first segment here, let's drift away into the April contract on gold. Obviously dollar related. I think the dollar's got a little bit, let's just go into the dollar really quick because that's going to predicate some of the things that we talked about here with gold. We talked about the ultimate kind of pullback point was to kind of wait and sit tight until that 96. In fact, we talked about it yesterday without charts up, that 96.47 area, 48. We haven't reached that yet. We're getting close to it. That would be the first kind of, take a shot situation, in my opinion. We're trading, 90, we've been down as low as 96.80 this morning. So right now, I think the dollar could drift a little bit lower. So that means that, in a default type sense, gold could drift a little bit higher. So let's just take a look at that with the technicals involved in gold based on that alone. You remember 1200 was kind of a magical number before. That's where the cliff, where gold was on the cliff and just completely got decimated one day. Considering that the dollar may pull back to that 96.47 area we just talked about, gold may inch up to 1200. I think 1200 is going to be kind of where you take some profit off the table, if not short it at that point. But we need to really see a new profile appearing here, or at least look down into the 240s, which we, as you can see, this has been a guiding kind of regulation of the long trade since we broke out above the 1172 area, which we didn't pull back to, which sucked really, because I was looking to buy a lot at 72, but didn't get back there after the break above and pull back and retest the other day. So that's the way gold is sitting right now. If you need to buy gold and you want to trade it up into 1200, I think you can put stops below this 1189 general area. Okay. So that's the situation on gold. Let's just hit silver really quick. And this is I'm going off the continuous contract front month on silver, May still. Man, what a powerful move, huh? So 1581, and that was combined with this number. So 1587, which we talked about a lot on this contract. We're getting into some weekly unfair highs now. Haven't reached them yet. Those unfair highs are 1721. That was a great move in silver. Good target rich environment there. I'd still sit tight with silver. You still don't have anything to hang on to here on the daily. No bearish overtones here. Considering the dollar may slide a little bit farther, possibly. Maybe not today, maybe tomorrow. We could get a little bit more move up. But again, I think the targets of 1721 at top are going to have to be paid attention to on that May contract. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got to show the bracket here. Forgot to talk about the basketball situation. I know everybody in the country's following it. This is my bracket, and as you can see, a lot of red cells there, and just got hammered the first round. I don't know if you guys are following this, but good old NC State's gotten through the number one seed over there. As you can see, I blindly just chose State to win that game, but actually they're playing Louisville, and that's going to be a good game. So as you can see, there's no money out there. Everything is leveraged out in the Sweet 16 already. So we'll see how this pans out. But hated to see Virginia lose. Really, really hated to see that. But could still have a ACC Final Four, which is what I'm hoping for. Just wanted to flash that. So that's the 2 cents on that deal. We're gonna take a look really quick at the euro, because we actually personally have some trades on the euro right now, and as you look at this, and the dollar with a little bit more slide left to it possibly, and the kind of the euro sitting here wanting to maybe, as you can see, we kind of had that nice little retest, close above again and retest. That was the powerful trade, as the dollar was showing a weakness to move a little bit higher. And what do you do now? We actually had to, we were actually playing some strangles on this, selling some premium because this thing had exploded, and we were having to kind of shuffle a little bit here and kind of re-hedge some things ourselves. So in anticipation that this thing might have a couple more legs up. So, when these currencies turn, these reversals, I'm not saying this is a long-term reversal, but they move pretty significantly, especially like we talked about yesterday. It's the first time we had technical damage since May of 2014. So, there's some people that might have to shift positions here. Here's the 240s. And, this is the situation where your tight stops can be put below 109.71. And these 240 unfair lows are down there about where the daily unfair highs are. So targets, I think if we get back up into this 112.45 area, that's going to be kind of all she wrote on this thing for now. So just keep those numbers in mind. I don't think it's time to short the euro right now. You don't have any leverage here, especially on the dailies, and you kind of want to see that first and foremost. All right, so let's get into a couple more things that are probably noteworthy instruments that we need to focus on. The yen, I'm really kind of disappointed. The dollar, obviously, with the dollar possibly heading a little bit lower, you're going to have to pay attention to the yen, trying to get into some lower inflection points as we speak. So, when do you start trying to pick this thing up again? We talked about this 117.74 area that might still be in order, and you got to pay attention to the dollar here. So I don't think it's time to buy this or short it right now, because you're just kind of in a situation that's not extremely definitive at this stage. I was surprised with this move. I'm going to pull up the Australian dollar. As we look at this has kind of been the gift that's kept on giving, just like the euro. But now, we've kind of poked our head above here, gone back and rattled around, retested. Don't have a lot of super faith that this is going to continue. But right now, if we can get back down and have a close below 78.78604, I'm going to be at that stage okay to start looking at this from the short side. But right now, you could move a little bit higher in this, and stops can be oriented around the unfair lows, or unfair highs on the daily. But we're kind of getting into some resistance already based on the weekly numbers, and I really don't have a lot of faith that this currency is going to follow through on the upside whatsoever. So I'm just kind of still looking at the Australian dollar as potential short possibilities, but just again wanting to pick battles in the right place. And getting a close again, just to review, back down below 78.604 is going to make me feel a lot better about that. There's a lot of, I'm over here in Asia, and Australian news is not hidden, put it that way. So it's just something I keep my eye on. As we look at the S&Ps here, we're going to get into the S&Ps, NASDAQ really quick, but we're going to go to break in about 10 seconds, so that's going to chop us off here. But here's the situation on the daily. If I can get this to come up. Here we go. And we're going to review some of the things of note technically when we come back on the S&Ps and NASDAQ. Hang in there, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And right now I'm showing the Shanghai with the breadth up top here. And these numbers are astonishing. This thing is just incredibly strong. But let's on that same note, let's just kind of reference the S&P 500 based on looking at those internals. And we're looking at let's just get the S&Ps up here. And we're going to wait for these stocks to load the internals. And we're going to talk about the breadth a little bit. And, you know, we had just a smidge of a crack in the armor based on I'll wait for that to load here and pull it over here. But with the breadth here, you know, just starting to tail off a little bit, but, you know, nothing significant whatsoever. Still relatively strong breadth. And the reason I'm saying that is because, you know, we talked yesterday and maybe even Friday about this thing just, you know, going through all-time highs just to do it. I don't see a lot of reasons whatsoever to go short right now. That's the one thing I want to say. But also, you probably are still going to be looking literally for buy points on this thing, and those buy points aren't on the dailies. They're not on the weeklies. This is the weekly situation. You know, still sitting down there 2063, and the big number on the S&P was at 2068, 2070 general area that we broke out above. That was kind of clean and clear of everything. But let's take a look at the 240s. You know, I think you got to be buying around 2088, 2089, and you just kind of let this thing power through. And that's just the way I'm looking at it. I don't think you need to be, this is my opinion, I don't think you need to be looking at resistance areas or any kind of cryptic, mysterious views into this right now. Anything other than just going with the crowd. and not being short. So that's my take on the S&Ps right now. Here's the NASDAQ situation. Somewhat similar, but even a little more attractive looking. Let's just get this up here so we can see it. New profile appeared last week. I don't know how did the commodity channel index pop up here? I have no idea how that happened. Let me get rid of it. Let's see. Well, it could be an omen. Maybe we should look at it. I don't know how the heck that popped up, but anyway, last week had a new profile appeared. This week we're just kind of rattling around, consolidating right around there. It just, I always look at these things and say, what if I am short? If I'm short, I'm terrified. So the major inflection point on the NASDAQ right now, 44.37. We're trading pre-market at around 44.43. But here's the daily situation. This will probably be and it's very similar to the S&Ps. I don't really have a lot to comment there, except for the 240 situation on the NASDAQ, obviously a little bit stronger. This has been on a relative strength scale, obviously stronger than the S&Ps, and we're just, if you've been doing that intermarket spread, long NASDAQ, short S&Ps, it can get away from you, but you ought to just, for your own interest sometimes, just get on one of these charting packages. E-Signal is a great one to do it on, and do some spread analysis on the NASDAQ S&P spread. And you might want to, if your charting package allows it, you can throw in an S&P equals Dow plus NASDAQ kind of amalgamation and play around with it, get your ratios right. And it's an interesting trade. We did very well with it when I was in Chicago. So to sum it up, I think the NASDAQ and the S&Ps are still buys, and that's based on breadth and clean and clear of some profiles here. All right, let's take a look at the DAX. A little bit of a request on that. Euro powering up. It's kind of put the brakes on this a little bit. So you've got a maximum buy point, in my opinion, 11,750. Some decent news coming out of Europe right now. I think the main banner I would put on this is it's okay to be long, not okay to be short. So just, again, don't be the hero on these things. They can go higher. All righty. All right, let's go back into a couple of gold stocks I want to review here, because gold, when you're sitting in front of the screen all day and trading's your business, you want to maximize your time that you're sitting in front of this. You want everything to be beneficial for the time that you spend on this, put it that way. I don't know if I said that right or not, but as you look at these things that are in play, markets that are moving, obviously oil is got some volatility right now, and so does gold. The dollar, you got some currency big time moves going on right now, but as we look at some of these gold stocks relative to these large moves in gold right now, not super large, but just kind of repricing itself relative to the dollar, if nothing else. Let's take a look at FCX. This is one that has finally got his head to some degree above water, above daily unfair highs. But again, I think you got to really pay attention, that may not be considered a breakout. We're trading 1879 pre-market, and we've had some volatility on this pre-market. I think you got to just let gold, even though it's a little bit of a noise factor there, but if you look at gold and think that 1200 mark might be some profit taken, I think you need to possibly wait and see on these FCXs of the world, especially where they're relative to profiles right now. This could be considered noise, and this may be a little bit of a lid, and we have backed off about 50 cents on this already, which is about a 5% move down in FCX since we hit that inflection point. So that's the situation on FCX. Let's take a look at Newmont Mining. If it'll come up, there it is. Quite the similar situation. If 1200's the mark on gold, again, you may have some, FCX kind of cross the border back down below, and Newmont Mining is, right at that similar situation here. So again, I think I'd let gold kind of pave the way on some of these. Let's take a look at GG. Again, has poked its head above, has had the close above, but again, very dependent on gold pricing around 1,200. So we're just going to, my take on it is just kind of sit tight and let gold pave the way again. Let's take a look at AEM. All right. Well, again, I think I want to sound like a broken record in a second if I've not already sounded like one. I think we just got to let gold do its thing up to 1,200. I think these things may relax a little bit, and you may have better opportunities to buy it a little bit lower than this. So I guess the other question is, do you short them now? No, I think, again, you guys got to look to gold on some of these. Let's take a look at SLW. Somebody else asked about that. Let's see. Here we go. Again, it's a very similar situation. I don't think you can buy it up here. Do you short it? No, you don't have anything to hang on to up there yet. So that's the situation on those gold stocks. Let's take a look at the GLD. All right. I'm a little bit bigger fan of buying gold than shorting it. So again, I think you got a better chance to buy gold or GLD down here around 113.14. It's trading 114. Let's see, pre-market 114.55 right now. So that's the situation on the GLD. All right, in the spirit and in the theme of things in play, let's go back to the XLE stocks for just a second. And let's bring up a couple of those. Let's get back to my XLE situation here. That's the S&P 500. Sorry guys, let me pull up the XLE. All right, scanners populated. Here we go. All right, didn't finish this a while ago because we were trying to jump into some things in the first segment. But as we look at this, we're going to look at TSO again. All right, this has been the one. In fact, Basil had said you guys have been following that on his show quite a bit. I'm going to pull this up because we're at two major inflection points here at the same spot. This one obviously closed above on a weekly, coming back and pulling back. Crude oil's, in my opinion, sitting at a place where it may provide some kind of drift down possibly right now. But looking at this one, if you're going to buy oil stocks or anything oil related, this is the one, in my opinion. You've got a chance here with a little bit of a, let's see, 92.06 pre-market. So we're sitting still around with a noise level around there. But again, crude only dragged this down. So in a classical sense, got a little bit of a bump there, consolidation move up, but a little bit of a reversal action here. I think you still need to wait, sit tight on the TSOs of the world, even though it's on a relative strength basis, knocking the skin off the ball right now. Here we go. Here's Schlumberger. Oh, a very big holding for a lot of folks. 82.38. We kind of did that kind of key reversal kind of situation. Again, I think this is something to stay away from on the long side. Let's take a look at ExxonMobil. This is something we've kind of been preaching to stay away from. And that was based on these, showing its hand very, very early, in my opinion, especially on a long-term basis. But you hope and pray this thing would get back up into 86.95 for another shorting opportunity. We're just not there right yet. It's 85.66. You got about another buck here to go before you get to these unfair highs on the weekly and unfair lows on the daily. Unfair lows on the weekly and unfair highs on the daily. Excuse me. I don't know if I said that right. But a little bit of a DMZ up there. We may give you a chance to short this if we can get a little bit higher, but on a relative strength basis, crude oil seems to be kind of running this thing also. Let's take a look at Noble Corp, NE. And here we go. Kind of nice that happened. 14.59, backed off right on the close, and pre-market we're trading 14.44. I like this as a short. It's really been a relative strength weaker stock. I know it's a $14 stock, and some people are like, why are you shorting a $14 stock? Well, turn the wrench the same way, put the stops in, and percentage-wise, see what this thing can provide. You can squeeze juice on the short side out of cheap stocks. There's no, I know what is their maximum 14 points in it, but we're talking about percentage basis here. Let's take a look at a couple others here. Valero, that's one that's kind of been on my radar screen, VLO. And what do you do with it now? So again, this has been the power move. It showed its hand very early. Did the breakout, didn't look back. Now we're at that 62.91 up top, and the daily, this is where we're at. Very close to all-time highs. If crude oil backs off a lot, you've got a really good buy point on this, in my opinion. Even though we've hit these weekly unfair highs, I'm gonna flash this one more time. We've hit these weekly unfair highs, and this box was painted two to 3 weeks ago. We've hit it, but we're at these, all-time highs. We may make another run at it. Things on the highs want to go higher, and I think 60.44 might be your buy point on this to try it again. But that would be in a scene where crude oil pulls back. If crude oil doesn't pull back, this thing may just power above 62.91. But again, if you're looking for strong stocks, you can't find a better one right now. Valero. Transocean, RIG. Let's take a look at it really quick. RIG. All right, so we've talked about this one. We've talked about staying away from this one, and there's two trains of thought here on this. One of them is we could have a snapback move up on a relative scale much greater because of the general weakness of this thing, and it didn't happen. So is this thing on sale? Did we cross back above weekly unfair lows? Yes. Are we sitting above daily unfair highs temporarily? Almost. I mean, we're kind of at a noise level. This, in my opinion, is a short. All right. So, again, a $15 stock, and we're talking about shorting it, but, that's just the relative strength trading game. All right. And that's relative to the XLE and also relative to the price of crude oil. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome to the show. We're looking at cotton right now. Somebody had asked for a little bit of an instant analysis on this. The targets above are definitely going to have to be on the long side, this 66.24 area. I'm going to pull this up. That's why, basically. You've got a pretty wide profile here on cotton relative to the previous ones. That means volatility without question. But as we look at this, how do you trade this? You might want to take a look at this. Here's kind of where the stops more than likely need to be oriented below 63.69. But as we look at this, again, when you see volatility like this, you want to think almost, how do I capture premium at the same time of a biased move, a directional move? So, that's one of the things that we like to do on our side is, how do you build a mousetrap to capture premium and also kind of maybe slant it towards one way or the other? I'm a little bit slanted towards the long side on cotton, even though we've had the move up since 60. The dollar hasn't, really been. It's been a friend to this, put it that way. But again, you're kind of, I think you got a little bit more juice left in this. I think the dollar could slide a little bit more, and stops below 63.69 would probably be in order. And I think you got a decent still risk reward trade up into 66.24. But I think that's kind of where you kind of reevaluate things. And wait for a weekly close to see if we can get something in that particular area on a weekly close. But definitely the bias, I think, is still towards the upside here. I think there's some more juice you can squeeze out of this thing. We got about 2 minutes before we go to the finality of the show, and Steve Rhodes is next. But we're going to just kind of quickly review. We're going to take a look at gold really quick. Remember, I think we've kind of taken the concept here, and we were, pulling back to these lower numbers earlier, but we're kind of moving higher. 1,200 is going to be the target on gold right now. We're going to have to pay attention to the dollar for that. We're going to pull that back up really quick. Anything that's dollar denominated as far as commodities, this has been a godsend for this group. But, we're continuing to pull back pre-market, just getting, the dollar's getting its head caved in right now, 96, 60, 61 still. Remember, we've got a chance to take a shot on the dollar, and maybe some support's going to be around this 96.47 area. That's going to be where, you're not going to back the truck up on this one, but you're going to say, you know what, we've had a good pullback. We've had some volatility. We can orient some stops there, give yourself a little bit of room, maybe lighten the position on the dollar. But those commodities are going to pay attention to that. So just be aware of those particular levels. All right, so let's go. Just one quick review of the S&Ps. I think these things, the S&Ps like a strong dollar. The S&Ps like a weak dollar. I don't even know what to say about this. The risk here is to be short still, the S&Ps. I think we're going to move higher. We're going to blow through this just to do it, if nothing else. And the breadth indicators that we use are still extremely positive, and no cracks in the armor, so to speak, on any long-term mechanisms for those breadth indicators. All right, so as we come into the close of the show, I want to thank Tom for calling in yesterday, and I also want to re-thank our programmer Demantis. We're going to try to have somebody on in our company probably once every week or two, and give you an idea, hopefully, of what's going on in the background within some of the things that we do as a company. So stay tuned, and stay tuned for Steve Rhodes next. We'll be right back again tomorrow. Have a good day trading, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.